A share at its most basic is really a piece of ownership in a company. So when you buy shares, you're buying a piece of that company, and hopefully, if it's a good investment, you are buying in its ongoing growth and success. So if you think about companies that you know that you've heard of, Commonwealth Bank of Australia or Woolworths or Wesfarmers, you're buying a piece of that company when you buy shares. So all those companies are listed on the Australian Stock Exchange, and they all have a 3 or 4 letter code. So for example, Commonwealth Bank is CBA, Wesfarmers is WES. Now, when you're buying shares, what you're really investing in is the ongoing success, you hope, because all investment carries some risk. There's no guarantee. So that could be what's called capital growth. That means the price of that share increases over time. And so when you sell at a price more than what you paid for it. There's your capital growth or capital gain. The other way in which you can benefit from the investment is through income. Now, when a company has profits, it can share those profits with its investors. That's called a dividend. Now, companies don't have to pay dividends. That's very much at the board discretion. But of course, it's a very good way of keeping your investors fully involved with the company and its growth and success when you do pay out a portion of your profits as a dividend to the investors. And that's very attractive to many investors because then there can be an income stream coming from those dividends. They're often paid twice a year. It can feel really daunting when you first think about how do I actually get involved in share investing. It's actually not as complicated as it sounds. Now, you do need a broker, and again, or what's called a stockbroker, and again, that terrifies people because they think that you have to just sort of know someone in order to get involved with a stockbroker. There's 2 different sorts. There's an online broker where you do it yourself, basically. It's an online transaction. It's very easy. There are great instructions, and that's things like CommSec, Commonwealth Bank offers that, or NabTrade, NAB offers it, and there's some others around as well. You just go onto the website, you read the instructions, you have to set up a cash account, so that there's money to actually go in to buy the shares. But again, all the instructions are there. It's very, very easy and the costs are very low. Or you can go with what's called a full service broker, which is a human being, a person who will assist you. And that's usually when you're actually probably more comfortable with investing and probably also have more money to invest because there are costs attached to that. The costs are higher for a full service broker than they are for an online broker. So really you want to know that you're going to cover your costs and continue to also make money on the investments to cover that plus. So with a full service broker, they're going to be actually making recommendations to you about what investments you could get into or what perhaps you should sell because something might be happening. So it comes with a service attached to it, which is why it's called a full service broker. Whereas with CommSec, you do your own research, but there's an enormous amount of research on that website. Same with NabTrade and other online brokers. You get access to a whole range of charts. You get access to analysis. You get access to ongoing newsletters and blogs. So it's not as if you're left on your own. There's a lot of research to assist you to make your own decisions with an online broker. Whereas with a full service broker, someone else will be doing a lot of analysis on your behalf and sending you what are called broker reports and analysis and making sure that you're informed and can make decisions when recommendations are made to you.